What if venture capital could add decades of joyful, healthy living for everyone?
There's so much BS going on, and we see as our duty to debunk that, to be a voice of reason and science.
But here's what most longevity investors get wrong.
You don't just want to add 2 decades of being frail, weak, and sick.
Paolo Pio and his team at Exceptional Ventures discovered something revolutionary.
We believe truly that from lifespan to health span, we want to increase the joy span.
But how do you actually invest in joy span?
This translates into the following investment verticals: prevention, early detection and diagnostics, and then smart delivery and care.
The numbers tell the story.
Health, wellness, and longevity, which is a huge market in almost 2 trillions, for some other numbers more, growing at incredible rate.
And their vision for the future?
It's our vision, basically from 4,000 of Fund 1 to 30,000 in Fund 3, providing returns that are going from big to bigger to ginormous.
Discover how a London-based VC is redefining what it means to invest in human potential and why JoySpan might be the key to unlocking the next wave of health tech innovation.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
Welcome back, everyone, to another episode of the EUVC Podcast. I hope that by now this is the home for European venture that you have gotten so used to attending once in a while. Today, we're diving deep with one of the scene's most thoughtful bridge builders, Paolo Pio of Exceptional Ventures. From his vantage point across Europe and the US, Paolo brings a global operator's lens to what Europe needs to become truly exceptional. And of course, the focus here is entirely on the longevity space, which, as you can see, I am in fact 70 years old, but I look like a 35-year-old. I'm kidding here. Everyone, I'm looking so much forward to this episode. Paolo, welcome to the pod.
Thank you so much, Andreas. Thank you for the invitation. And big fan of what you guys are building. I'm glad I get to contribute a tiny bit.
Thank you, man. You're amazing. Paolo, this is one of our pitch episodes, as I like to call them, where I'll ask you to pull up the deck on Exceptional Ventures to tell us all what you're about and what you're building. I'll ask questions kind of as an LP might do in a meeting along the way, but I don't want to steal their thunder either. So sometimes I'll just shut up and let you take the light.
Sounds like a plan. I'm happy to give you background on what we're building at Exceptional Ventures. We'll kind of go through the deck, but I don't want to make it overly boring. And so we'll take some poetic licenses, keep it here and there.
Beautiful, Paolo. Nothing is ever boring with you. Let's go.
Very well. So for those who don't know me, my name is Paolo Pio, and I am the co-founder and general partner at Exceptional Ventures. We are a London-based VC fund with the mission to help people live longer, healthier, and happier lives. So this is something I strongly feel about. I love nutrition. I love fitness. I love health. I'm a nerd when it comes down to reading about each of these topics. And so is my co-founder, Matt. Hence why 4 years ago when we met, we did a few things together in terms of investments, and that thought we would actually raise a fund that would be mission-driven, and specifically with this mission that I just mentioned, which is around improving human joy span. And just to walk you through the deck, we'll discuss exactly this mission, the team behind the mission, why we chose to go after this opportunity, what's our investment strategy, and how we do sourcing, evaluating, and winning, and then why we think we are some of the best at adding value. Closing with a track record, what we learned from our first fund. Just as a reminder, we're launching our second just now. So as just discussed, we believe what we want to build with Exceptional Ventures is a VC fund that over the next 15, 20 years, will really accomplish these. Help people live better and live longer. Each company we invest in gets us closer to this vision. So we strongly believe in this. It's not just writing on the wall, but it's actually something that we ask ourselves every time we want to cut a check. Does this really get us closer to this? Is this really a startups that help us live longer, healthier. If not, we don't cut the check. And with this, maybe just to take you guys a step back, the industry of, let's say, longevity and living longer started talking about lifespan. And so how many years of life we are given on this earth. And we know that that's been growing, right, through the centuries. And lately we're getting, beginning of the century, last century, we were at like 40, 50. By the end, we were at like 70 or so. Now we're getting to the high 70s. But which of these years are actually lived in a healthy condition, right? Because you don't just want to add 2 decades of being frail, weak, and sick. Hence, from lifespan, we move the conversation to health span. So how many healthy decades can I add to life? And a lot of the changes that came to do this would be lifestyle changes, so fitness, nutrition, sleep, and they really get us there. But now, sometimes to the detriment of actually us taking advantage of the time we spend on Earth. So you would see exaggeration in the sense of people that go to sleep every night at 8:30 p.m., right? That have their last meal at 11 a.m. They eat 1,925 calories per day. They transfuse their son's blood. That stay away from sugar, stay away from chocolate, and what kind of life are we living? So we believe truly that from lifespan to health span, we want to increase the joy span. So how many years of healthy life in which we can get joy out of life do we have, right? And with the fund, that's the mission. These are the companies that we want to back, right? Following the principle of what is it I'm willing to sacrifice to live longer and what I am not. And in my case, for example, it can be I love sports and adrenaline and climbing, mountaineering, snowboarding. Those are not necessarily very good for longevity, but they give me pleasure, they give me joy, and that's my thing. For someone else can be chocolate, for someone else can be wine. So that's really the concept behind joy span that we are pursuing as a fund. In order to follow this vision, mission, right, and maximize joy span, this translates into the following investment verticals, which relate to prevention, early detection and diagnostics, and then smart delivery and care. So, ideally, we want to prevent getting sick. And as mentioned, how do we do that? Well, we want to build a really strong sleep hygiene and habits and prioritize it, at least 8 hours of sleep per night. And then exercise, it's super important, right? And, we want to be able to do resistance training, cardiovascular training, stability training. Each of them is proven to extend your lives, is directly correlated to how many years we live. In fact, the fitter you are, the longer you live. Nutrition, also very important. Don't overeat, right? I like my mom used to say, get up from the table when you are 80% full. She had the secret. And then protein, very important. Fiber, super important. Stay away from trans fats and fried stuff. Those are all good things. And on top of it, then you want to add stress management. And so in a world where we are continuously bombarded by WhatsApps and emails and do this and do that, how do you take a breath and distress and manage your levels of cortisol? And then on top, what is that giving us purpose in what we do and the sense of connections with the loved ones and with our friends. So in a way, this is what prevents us from getting sick. This was the bulk of our investments in Fund 1. Now in Fund 2, we're also adventuring into early detection and diagnostic, because unfortunately we all get sick. And so might as well catch it early as possible when it's still curable, before it actually degenerates into disease. And the last, let's say, pillar of our investment thesis is around smarter delivery and care. So how technology is enabling us to provide better, smarter delivery, and using from telemedicine to AI to nanobots to brain-computer interfaces and all that. To fulfill this mission, we put together an incredible team. Started just as mentioned with myself and my co-founder. This is a good time to briefly introduce myself, where I mentioned I started the fund Exceptional Ventures in 2022 together with Matt. Before that, my career actually started as a computer science engineer. That's where I studied in Italy, and I left for my first job in 2006 to go to San Francisco. I worked at Cisco for 13 years, first writing code as an engineer, then in a product management function. And then I closed leading business development for Europe, Africa, Middle East, and Asia. At the same time, I did an executive MBA here in London to learn about investments and finance. And I discovered venture capital. I thought it was fun and discovered my passion for it. Decided that's what I wanted to do. So in 2017, 18, I started doing angel investments in the areas I was most passionate about, which all related to health, wellness, and fitness. Because I'm also on the side a fitness instructor, certified in HIIT, so high intensity interval training. And basically that became my main job in 2019 when I was introduced to an American fund investing in health and wellness called Joyance Partners that was expanding to Europe. They needed a managing director to lead this expansion. We met, liked each other. I joined them. I launched Joyance European arm. We invested in more than 20 companies over 9 countries in the period of time I was with them. And eventually, as mentioned in 2021, I met with Matt. We realized we had a lot of common passion. And together we decided to start EB. We also have a complementary background. In fact, Matt is a fantastic co-founder. I am lucky to be working with him because prior to this, he was one of the original founders of Capital One Bank in the US in the late 80s. You guys might know Capital One is today the 6th largest American bank with a market cap of roughly 70 billion. So, Matt was hugely successful as founder. He exited Capital One in the early 2000s and started basically working with founders at the early stage, helping them with advice, mentorship. Sometimes they would ask him to become board members, sometimes chairman. So over the following 20 years, from early 2000 until early 2020s, he invested in more than 150 companies with a fantastic track record in terms of returns. And one of them is Octopus Group. Many might be familiar with Octopus Ventures as well as Octopus Energy. They're all part of Octopus Group. Matt was first external investor back in 2001, as well as chairman from inception back then up until a year or so ago.
And just to add to this, Paolo, we have an episode coming out with you and Matt on the 6th of July. So very soon, there'll be a full episode with Paolo and Matt going out together, talking about their thesis around Joyspan in much more detail than we'll be able to today.
Absolutely. Thank you for that. It was a fun one. I appreciate it. Yeah. So together, as mentioned, we kind of now have this vision of building, let's say, another Capital One or another Octopus, but really as a mission-driven fund, right? Develop these into a franchise over the next 15, 20 years, Exceptional Ventures to be the health and wellness firm. So every founder operating in this space, we wanted to come and talk with us first, right? And we really want to help them out. And we want to be subject matter expert and recognized as such in the area of health at the intersection with technology. This was 4 years ago when we met. And as mentioned, we did our first fund, starting ourselves and eventually putting together an incredible team. Right now we are a core team of 7 people with a number of venture partners, advisors, and scouts, many in UK, a few in Europe and US. I believe we probably have Annie and Mark on the line. I would love for them to introduce themselves if it's possible.
Hello, everyone. My name is Anna. I'm really happy to be here. Thank you, Paolo and Andreas, for the opportunity. As Paolo was mentioning, I am a scientist. I joined the team last year, early 2024. I come from Barcelona. I studied biotechnology. I worked for a couple of startups in Cambridge and in the UK, in Barcelona as well, developing new therapeutics for cardiovascular disease and chronic pain. In 2018, I completely moved to the UK to pursue my PhD, and I became a doctor in pharmacology in 2022. And I continued working as an academic researcher. And on the side, I was building my commercialization skills and business skills together with the scientific entrepreneurship community in London. I helped expand it, met lots of incredible entrepreneurs. And on that journey, I also met Matt and Paolo. And here I am today, learning a lot, making most of it, and developing great relationships with founders and investors in the space. Thank you.
Wonderful.
Thank you, Anna.
Fantastic. Thank you,
Paolo,
Anna.
maybe given this introduction right now, you could maybe talk just for a second why you have prioritized getting a communication and community manager at this time of the fund development cycle, because it's not always that you see that with a fund of your size.
Right. So that Andy does that plus scientific research. So she helps us with both, given her PhD pharmacology background. And the reason we prioritize is because we feel strongly the need to, in a way, within a space like ours that is attracting a lot of charlatans and are telling you to buy these supplements that is going to make you sleep perfect every night, or this other one that will increase your biceps, and this other one that is going to do something else. Yeah, man, me too. I'd love that, please. But there's so much BS going on, and we see as our duty to debunk that, right? To be a voice of reason and science, and hence that's what we're doing. We back science-backed companies, and we speak up about what is data proven and what is just fiction. And again, people telling you whatever BS, leveraging their position as influencers in order to sell olive oil for 40 pounds a bottle.
Yeah, and to those listening in, Paolo is the diplomatic one of the founding team. If you tune into the other episode that we have coming out with both Paolo and Matt, you'll notice that Matt has a big vocabulary when it comes to talking about the BS creators in the industry of longevity.
To fulfill our mission, to help people live longer, healthier, and happier lives, of course, we want to make exceptional returns with the companies we invest in, and we want to support, educate the public, the consumers around what is science from what is fiction. So the opportunity we're going after is the one of, as mentioned, health, wellness, and longevity, which is a huge market in almost 2 trillion, for some other numbers more, growing at incredible rate and driven by a number of trends. On one side, you have an aging population, right? People are getting older. Healthcare system can't keep up anymore. Cost of healthcare is increasing. Also, consumers, younger generations, care more about staying well, right? They're more proactive. They measure themselves in every possible way, rather than the older generation that was waiting until, my dad wouldn't freaking go to a doctor until he just can't move anymore. And that's the case still now. So, on one side, you have these health trends, but on the other side, you have also scientific progress that is pushing into this market, because now you have new drugs that really can help you lose weight, like the GLP-1s, right? That weren't available just a few years ago. Now you have new technologies that can allow you to do early screening and risk assessment using AI that also wasn't available until a few years ago. Now you can have a doctor that knows everything in your pocket. There's a number of trends that are making this such a huge space and growing massively. But then, because it's growing so fast, also massive, is also attracting fantastic entrepreneurs as well as charlatans. And so in a way, we go back to what we mentioned earlier. So Q1 2025 was actually an all-time record for health tech, which was the most invested sector before fintech even, right? So almost twice as much capital. Now, we've been talking about these, for the last 4 years. So in a way, we definitely were early calling this out, and now we're fantastically positioned to capture this. We already did it with our Fund 1, and our Fund 1 is doing well because of the trends in these sectors. Of course, I believe we are great investors, but it's a lot has to do with things going up and to the right because of the trends we just saw earlier.
To anyone listening in, not watching the screen, Paolo's showing a chart here showing that health tech reached 4.8 billion in Q1 2025, almost twice as much as fintech, which only reached 2.8 billion in deal value. I'd love to ask you, Paolo, what companies drove this remarkable deal volume in health?
I mean, you have many. You have, from Neko Health, for example, that I'm sure you know, that I think received 100 and some million last quarter in funding. So some very large macro rounds. You also have a lot of tech bio kind of companies. So you have very, very massive, very large rounds, and you also have a high volume in general of a longer tail. So it's a proper shift, and it includes therapeutics, it includes medical devices, it includes health and tech, which is mainly what we invest in. So across the board, AI is a big part of it as well, and health is a fantastic application of AI. In fact, of the 11 AI unicorns that were coined last quarter, 6 of them were in health. This is worldwide. This is a huge deal. Now, for example, Abridge, it's an AI scribe. It listens in while you're speaking with your doctor, and by the end of it, it types out all the notes, action items, drugs you need to take. Neko Health, we just discussed it. It's high-end preventative health clinic by the founders of Spotify. Another one I love is Open Evidence that basically does that. It assists doctors at the point of delivery, where basically, a pediatrician knows everything about this. An orthopedics knows everything about this much. So doctors tend to be very, very, very deep and very, very narrow. Now, you train an LLM that is as deep as many doctors, but in all the many different areas of medicine, right? And so now you have a super supporter that can really help out doctors at the point of decision making. So in terms of investment strategy, as mentioned, we're launching our second fund. We plan to focus on the areas mentioned earlier. So prevention, so stay well, catch it early, and then smarter delivery and care. Our stage is still going to be pre-seed and seed. Ideally, our entry valuation below 10 million, which is exactly the same as Fund 1. Doing check sizes between 200K up to 1 million. We want to invest over the next 3 years, so from summer 2025 to summer 2028, into 50 to 60 companies. We know we're going to invest 70% UK, Europe, 30% US, which reflects similar, and we'll see in a second, to what we did off on one. And our vision is really to deliver exceptional returns and impact. And our target of for fundraising of Fund 2 is between 35 and 50 million pounds.
I just wanted to shoot in a comment, which is thank you for doing 50 to 60 investments. I think we have far too many in Europe that don't follow a model where they do a lot of investments like you do. I am excited by it. I know there are others that have another philosophy, and I know that both can be argued for. I'm just happy to see it.
Appreciate it. Thank you. And I also believe that each one should play to their strength. Our strength is to be very, it to be thematic. So within, the sectors of health, I love being thematic and prolific and do many investments within the sectors of health, because that way we can then get our founders. One is building this part of the health solution. The other one is building this piece to work together. We've done it time and again. Countless of our founders, we made introductions and they went and one became distributor of the other. One became customer to, we started and built a product together. So we have at least 20, 25 examples out of our Fund 1. Every new company we invest in can work with each of our now almost 40 portfolio companies. So this is basically a flywheel that compounds week after week, month after month, year after year. So that's why we have this big vision that we want to build over the next 15, 20 years, and having a large portfolio enables it even more. And then in terms of geographic location, we are a very internationally driven firm. Our own team is distributed across UK, US, France, Italy, and India. Our investments out of Fund 1, half of them roughly were in the UK, 20% was in the US, more or less, and then 30% was in Europe across a number of countries. And our own LPs come from the UK, come from the US, come from Italy, of course, and then many other countries that we have almost 100 LPs in Fund 1. The backers of Fund 1 were many of my ex-colleagues from Cisco in the United States, from London, where Matt and I live, both friends and ex-colleagues from Octopus, from Matt's side, Capital One, also Matt's side. And then founders, exited founders from Italy, but also from the new and old economy, right, that want to differentiate into this. So we have, founders that invested after having listed their company on NASDAQ, for example. So we have an incredible group of people. But yes, you're right. Many invested 50K, 100K, 150, but some put 250, 750, 1 million. So that was our Fund 1, right? And those people, and we have also 5 family offices in Fund 1. And that, many of those people are reconfirming now into our Fund 2. Many of those people went to also collaborate with our startups, because those are, as mentioned, excellent founders, and they can actually help our entrepreneurs that are building and are starting from scratch and are younger and are more inexperienced. So, those people that care about the sectors we invest in are our best supporters.
European venture, when you boil it down to the best people, there's not that many left. It's not like we have a ton of longevity-focused funds that take, so to say, this perspective as you do, which is both around community, but also around this point that you're trying to actually focus on the lifestyle and the change that's happening in the world right now around why longevity is so coming into people's minds, so to say, where there's a lot of funds that maybe come from more of a medical background or more of a pharmacological background and life science background, and then also do longevity, so to say, as an extension of that, but not where it's an explicit focus like yours. So I really think that Exceptional has an incredible chance and opportunity of becoming the Joyspan, the longevity fund of Europe, which I think is hugely exciting, and which is also why I like that you're taking many shots, because I think that in this space there's so much happening and we don't know where the winner is going to be. So I think it makes a ton of sense that you want to be able to capture as much as possible across Europe rather than make a few concentrated bets.
I really appreciate it. Thank you. I think the same. And Fund 3 is going to be even more, targeting 90 to 100 companies when the time comes in 2028.
I love it.
Exactly. So how do we source deals? Well, the majority of our deals, our invested companies, came by referral of other VC in the space. This is one of the reasons I love being a thematic investor. It's very clear for people to know when to call us, right? If it's a deal in health and the intersection with tech, that's it, right? And give us a call if it's related to telemedicine, if it's related to digital life pharmacy, if it's related to preventative health, continuous monitoring, right? Female health, gut microbiome, fertility, all those things. We've all invested across all those areas. Being thematics allows us to build our reputation, have a very clear position in the market, and also it's clear where we add value. People know that within the areas of health, we are experts ourselves, and so are our founders, and we can make these connections. We've done it time and again. So other VCs, our existing portfolio founders have been great at sourcing. Our previous angel companies, Matt now has invested in 200 companies as angel. I've done almost 15 as angel, and in my previous fund, also 25. So it's a big community of founders that go and do it again, and we back them again, or they recommended their friends, right? And then, of course, we have our own scout and a lot of friends of the fund. And our LPs as well have referred a lot of deals. So I think we really benefit, as mentioned, this network effect that is compounding, produces this positively selected deal flow that we're seeing in these stats. We did in Fund 1, 37 investments over 3 years, right? So Fund 1 launched in June 2022. Now we are almost in June 2025. We're almost fully deployed. We have 3 more investments to go that hopefully we should be closing over the next month or so. And then comes August, we'll do closing of our new fund, Fund 2, and we'll continue doing investments up to Fund 2. The stats for Fund 1 is that it invested in 37 companies, and to do this, looked at almost 3,600 companies. So you can see that basically we are 100 to 1 invested company, right? And in line with VCs, even though I do think that we see a lot, but also we know what's in a way those that come through trusted sources are those that eventually make it to the founder. But that's what I've seen.
You do have one interesting thing on the slide that you're showing now, which is from the partner calls down to IC, down to deal. You go from 388 at partner calls, and then you bring 171, which is 44% of that. And then out of that, you have done 37 deals. So you've done 22% of those 171. That might be considered an interesting drop-off. And I think that there's something interesting here with regards to how you use the IC. And I think it's just an interesting discussion for the audience to hear here, because oftentimes, or at least in many firms, you'd say, well, if you take it to IC, you really want it to go through.
No, we, in fact, have a weekly partners meetings. Every week we look at new companies and evaluate if we should cut a check or not. And we have been historically up until now, our pace is 1 new investments per month. And sometimes, of course, things are not, there's 3 months we do nothing, and then there's a month we do 4 checks. So therefore we need to be able to move quickly, decide very quickly, hence why we meet quickly. And we analyze a lot of companies, even at IC. It's good to discuss it also for the benefit of the group. So it's not just me. So me and Matt are eventually the ultimate decision maker. Both of us need to say yes for a check to be cut out of the fund. But, it's great that Annie is part of the IC. So they listen in, so does Michaela, so does the rest of the core team, because that way they're growing, right? And they join us, they were juniors, now they're becoming mid-level in Fund 2, and ideally by the time we get to Fund 3, they're going to make a partner, and then in Fund 4, they will be GP themselves, right? So by giving them exposure to these conversations, and by they are learning also when to say no and when to say yes sooner, right? So yeah, that's a bit to keep in it. Wonderful. So in a way, I also think that we have unique principles that translate into our modus operandi, right? So we believe in, and that's something also I love about Matt. When I met with Matt, I realized that we not only are passionate about the same sectors, but also have a lot in common in how we like to work with people. And integrity is at the foundation of our relationships with our founders, with our LPs, as it is with our family and friends. And, with our founders, we really believe in rolling up our sleeves and adding value. And that in terms builds a very strong community that we are nurturing, again, month after month, year after year, and it's growing. And that in turn leads you to see the best founders. The best founders give you the best returns, and the best returns attract the best LPs. And hence we have this flywheel effect that is, again, improving year after year. And we want to continue building over the next 10, 15 years. And reflects, there's not a lot of people in finance, not just VC, that care about being kind, working with integrity, being ambitious. Right now, as mentioned, our network is almost 4,000 people between co-investor and friends and accelerators we have relationship with, but it's growing, right? And the vision is to scale it to 10,000, in year 3 and 30,000 in Fund 4. So really set it up for growth. And then in terms of value add, without going too much into details, but I think that already during the investments, we should provide connection to the founders, even if we don't invest sometimes, but we care a big deal about working with them and showing our true colors from the get-go. Post-investment, we are unusually well connected for an emerging manager, as mentioned, benefiting from 20 years of experience of Matt in this industry, as well as his unicorn founder experience and mine across the spectrum. So we help out a lot with connection. We help out a lot of connection with capital, connection to potential clients and customers, as well as strategy. Should we go B2B? Should we go B2B2C? Who should be the payer? Should we sell it to employers? Should we sell it to insurance? We've seen these in a number of occasions that can really help. Also, at realization, I think we are uniquely positioned to support. And, in that case, mainly Matt has done a lot of both being a chairman and executive of public companies, right? And we're unusually connected, along the entire spectrum and life cycle of startups. These are some quotes from our entrepreneurs. I think we leave them, for people to read, but, the best way to diligence us, please speak with our founders, see what they say. We bring a lot of other investors on the board, and many of the ones on the slide, or we collaborate with, where we invested in their company, they invested in our company. And we are connected in Europe, in UK, and US, Apple seed, Series A, and growth. And for each of our companies that goes on to raise a follow-on rounds, we can make like 30, 40, 50 productions. We've done it times and again. These are examples of one of our companies out of Fund 1, out of the first year, that when we invested a couple of years ago, they were making roughly 2 million in revenue, and now they are close to 25 million in revenues. So, they went from 2 to 25 in a little more than 2 years, which is a huge amount of scale. And this is online digital therapeutics and pharmacy. So you would insert your symptoms, tells you which condition you have, which drug you should take. If it requires a prescription, their doctor signs it, then goes to a warehouse, picks up the drugs, and delivers it to you the day after. So basically simplifies, digitizes a process that is today extremely manual, slow, and broken. And it's a huge market. In terms of track record, you can see that Fund 1 is performing really well. Our Fund 1 is June 2022 vintage. And right now we are out of the J curve at a multiple invested capital of almost 1.3x, projecting to get by the end of the year around 1.4 to 1.5. So I think, again, we caught a fantastic trend that is really pushing companies to grow hugely. And this is a slide I love. Even I'm going to read it for those that don't have the video, but basically, we track the revenue of our portfolio. We did a cohort analysis. The first year, 2022, we invested in 13 companies. The total revenue of those in 2022 amounted to 12 million pounds. The following year, they almost doubled, almost landing at 20 million. The year after, again, they almost doubled, this time around landing at 34. And then this year, they're projected to double again at 70 million. So these are real revenue of the same 13 companies that we invested in year one of the existence of our fund in 2022. So, if they continue like this, I think we should be pretty happy about the returns of Fund 1. So these are some examples to provide success stories, I guess, of also exemplify what we invest in. We already discussed the online digital pharmacy. Sama Health is a company that does basically a continuous glucose monitor. I am wearing one at the moment. It's cheaper than the status quo. It's longer lasting. It's less invasive. So continuous hormone monitoring is something we strongly believe in not just applies to diabetic patients, but also to wellness, to people that, like me, care about knowing how glucose, how carbs affect your metabolism, how food affects your body, right? So perhaps, Andreas, you can eat pasta and pizza and your glucose is flat and mine might spike. But maybe you eat mango and pineapple and yours goes up to the roof and mine is flat. So, there is, different foods affect different people different. Continuously monitoring helps us understand that and optimize for our own metabolism. And then another company that is doing fantastically well, that also did 4x revenue in a year and a half, it's in the US, called Beyond Health. And they're basically rolling up health clinics from doctors in countryside America. Young doctors don't want to live in rural areas. They want to move to big cities. And so retiring physicians don't know who to give their practice to. Their patients, once they shut down, need to drive an additional 30 to 40 minutes. So Beyond Health already bought 5 of these clinics, staffed them with nurse practitioners that are augmented by a doctor, centralized and available in telemedicine, right? And then rolls out additional digital health services. They've been doing, again, extremely well. They're scaling fast, and we have a lot of conviction they can become a very large health group in the US. So what did we learn from Fund 1? Well, for Fund 1, we learned that, number one, health is a huge market, and we want to double down on that. In Fund 1, we also invested in the future of food and financial health. We decided for Fund 2 to specialize in health, right? So our first pillar, which was our most invested, has also been the most successful. All right, that's going to be our sole focus for Fund 2. We want to be specialists, subject matter experts, and continue to grow only in health And it's a huge market, and companies can do extremely well, and so can our fund, and so fulfilling our vision. We realized that pre-seed and seed work really well. We are specialists at investing in companies that are raising first money or right after. We want to stay there. We can produce huge returns with that, and we can add huge value. We learned that our reputation is super important in driving our deal flow. We love, therefore, being recognized for the health, wellness, and longevity experts, as we saw. And then we also saw that we can do a high volume of deals, maintaining the quality super high. Hence why in Fund 2, we're actually doing more deals, cutting 1.5 check amount instead of just one, more or less. That we want to build for the long term. We have done partnerships with many much more established players, punching way above our weight, and that we care about retaining talent, and hence why I really care about the people in our team. They've been fantastic performers, they've been stellar, and I really want them to stay with us, hopefully for the long term, right? And develop them personally and professionally for their own interest. And then with this, we get to the summer of term slides, where basically, as mentioned, we're launching our second fund in August. So we're driving towards closing. We're going to do our first closing at the end of July. We are onboarding new LP investors every week. We have many already signed and many more that are in the process of signing. If you're interested in the fund, please do reach out. We are doing SPV together with EUVC that is going to be live in the next week or so to pull smaller checks. We are keen for our respective communities to get to know each other, to be on the same, in a way, cap table in the same fund. So many of our smaller investors will go into this vehicle, and hopefully many from the UBC community as well will go into this vehicle that is then investing in the fund. As mentioned, you have a month and so to think about it. We would love to have you, talk with you. David and Andreas have been fantastic partners for real, and I look forward to working together with them, for the next 15, 20 years and many more vehicles. And this is our vision. Our Fund 2, as mentioned, which we are just about to launch, is a 2025 vintage. Our Fund 1 was a 2022, where we raised 12 million and invested into almost 40 companies by now. Fund 2, we invested into 50 to 60. And then ideally, we're going to be doing Fund 3 in 2028 that will invest into 90 plus companies, backing more than 200 founders with more than 200 LP investors. And our community grows basically from 4,000 of Fund 1 to 10,000 of Fund 2, ideally to 30,000 in Fund 3, providing returns that are going from big to bigger to ginormous, right? And then with Fund 4, we're going to certainly reach for the star and longevity.
Paolo, I just want to thank you so much for jumping on here for the podcast, and of course also for welcoming us into your LP community.
By all means, it's a pleasure.
Paolo, before we close, I want to just make one mention for everyone that tuned in today. So in this podcast, we decided to say, let's do the thorough walkthrough of the deck so everyone has the opportunity to see what you're building as a firm. In the other episode that we did with you and Matt, we of course dived much more deeply into the state of the market in longevity, your views on the different situations that are both, and opportunities that are rising. Some people are incredibly bullish on some of the more curious stuff or some of the more weird stuff that in this community of longevity in love people. Absolutely, there's some people that love it, and there's some people that absolutely despise it and say, no, you got to get down to the roots. We have a big discussion of that in the other episode. Before we close, just want to ask you one question, Paolo. The competition in Europe for the longevity space for LP dollars, who are there that people might be thinking about when they're evaluating you as exceptional?
So VC, in a way, is a cooperation and competition, right? So it's a competition kind of business, and there's many funds that we collaborate very closely with, and we don't feel rounds ourselves. Hence, others invite us to theirs, and we do the same with others. We have the funds we work the closest with, and I guess those that have a similar investment thesis would be the likes of CanStorm, which I think are doing a fantastic job out of Austria in building a really great portfolio of companies in intersectional health and technology. They are also at a fund too, and we're close to them. I love working with them. Wiser out of Munich. They are a larger fund. They are a 90 million fund backed by EIF. They're launching also Fund 2, which I think is targets twice the size, I believe. They invest slightly later stage, so Series A and onwards normally. You have many that are Series A and later. You don't have tons at the early stage, right? Amino Collective is another one that is a slightly different investment. It's also out of Germany, but still within health technologies. And then many others would be, let's say, larger funds that are maybe sector agnostic, but have people in health. For example, Speed Invest is one of them. Early Bird is one of them. Balderton Atomico, right, have people that are health specialists, even though the overall fund is sector agnostic, and many of them are our co-investors and follow-on investors.
Yeah, and maybe I'd love to ask you just about the follow-on investors, because this is one of the points that I particularly like around longevity, is that maybe at the early stage, there's maybe not that many that at least focus on it solely, but because many of the models, once they prove out, they follow business models and growth trajectories that many VCs, generalist VCs, have seen in other classes. But maybe you can talk a bit about the different follow-on investors, from large to big to small, to those that you've done deals with, to those you haven't, but are curious in this space or maybe just fully committed to it. Could you talk a bit about the follow-on landscape?
By all means. So as we're talking, Balderton is doing investment into one of our companies. Well, they already invested in the Sama Health in their Series A, right? We invested in their seed. So that would be one that is a well-known brand name in the UK that are very knowledgeable about the space. Albion as well led the Series A of one of our companies we invested in. It's not yet official, so we won't say which one. So you would have these larger players that do checks in the space, even though, again, perhaps they're not necessarily just focused on health. And having said that, I also want to highlight the fact that we don't invest in what's called longevity therapeutics, so drugs that will make you live longer. Take a pill and will make you live longer, right? That's not what we do. There's funds that do that. That's not us. We don't do drug development. We don't go after the hallmarks of aging as defined, such as, for example, clearing senescent cells or tackling mitochondrial dysfunction. No, we believe in, as mentioned, staying healthy. So we build in more early diagnostics, so catch it early. So so all technologies that can help us do it, intersectional health and tech. I love this intersection. I'm a software engineer with a passion for health, and that's exactly where we invest in. In a way, it's also what math.
Am I right, Paolo, in saying, and here's a big shout out to our friends at Amino, am I right in saying that if this is the space you're excited about, but you're more on the tech bio side, the more wet lab, more actual computational biology side, then Amino is probably the firm to go with in Europe, whereas when it's more digital, you're definitely one of the key players.
Yeah, by all means. And I think they're doing a fantastic job in their space. And we met, we in a way compare notes. We haven't yet co-invested for the reason you're mentioning, because health is so broad. They're investing in this bit and we're investing in this bit, right? And both of us hopefully will do fantastic, driving towards the same mission though.
And on the follow-on point, there's just one curiosity around this, which I think is a bit interesting, which is, of course, that I think everyone has seen the articles of how the big VCs are trying to live forever. And honestly, that is something that you can also, be a bit happy about as an investor in this space, because you do have interest on a personal level from the big follow-on investors. And for that reason, it tends to get on their radar in a higher way than maybe would if it was industrial 4.0 technology.
That is entirely correct. People do it because everyone wants to be healthier, live longer, looking better, and this is a way to through the companies you invest in. You learn and you benefit from cutting edge products that wouldn't happen if you were investing in cybersecurity or defense.
Yeah. Paolo, thank you so much for joining us today. I am super excited to be joining you formally on your journey. We've been on the outside looking in. We've always followed you. We've been at some of your events. You do incredible events that are very different from everything else when it comes to the normal tech conference, because you tend to do the morning workouts at SuperVenture and Italian Tech Week, and I don't know where you haven't done it anymore. So exciting to be with you, Paolo. Thank you for joining us today.
Fantastic. Thank you so much, Andreas. And I look forward to this 10-year journey together.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.